A wonderful good morning. What do we have? Tuesday, the 17th of August, and it's time for this week's first episode of That Crypto Show. A very warm welcome from me here from the Prime XPT Trading Studio. My name is Dirk Hartig. I'm the head of education here at primexbt.com, and I have the pleasure of being your host today. And much has happened over the weekend, and today we want to take a look at the road ahead for Bitcoin and try to answer the question that is really on everybody's mind, probably out there, that has been following the recent bull run from around about 29,500 to we were topping at 48,000 yesterday. And we are trying to answer the question if we are going to stay in consolidation mode this week, or what the likelihoods are of hitting 50,000 US dollars in Bitcoin this week. Before we start, as always, our risk disclaimer: this webinar is brought to you and provided by the primexpt.com research team, and nothing we are saying here, we are telling you, is indicated. It's not intended to be financial advice. This is educational content. Our mission is to teach you to become a better trader, to be able to make better, well-informed trading decisions. All right. What do we see here? And actually, before we go into the chart, let's, as always, have a look at the fear and greed index from yesterday night. I think it should be updated soon too. Is it already? No, it's not yet. Okay, then we'll just. I don't think much has changed probably. So what we see at the moment still, as most of last week, we are in the area of greed here. Greed meaning the market sentiment is very, very positive for Bitcoin. We were on the weekend, if I'm not mistaken, already in the area of extreme greed. Extreme greed meaning people are, as the wording already says, probably getting too greedy. Things are seen too positive. When you see those extremes, there's always the likelihood of a reversal that is going to take place. So you want to be a little bit careful. In general, when you use those sentiments like I do, it means if you are here in the green area, I personally prefer to trade long positions because the market is going to react with more momentum to the upside than to the low side. And I think you can see this here, especially if you look here at the candle on Friday. We can see this once the momentum is there on the upside in such a sentiment, it's quite strong. That, of course, doesn't mean we are not consolidating and seeing red candles. And a month ago, we were on the opposite here in the area of extreme fear, where we also saw the opposite on the chart. So you would see those large red-green candles when things started to consolidate into neutral territory, and we broke out. But we covered this in depth already in our shows last week and the week before. So for me, I'm still looking for long positions. The question now really is, what are we going to see this week? If you have been following our show here as a regular viewer, you will have noticed that I've been saying a lot with moving 200 days moving average, which at the moment is around about at 45,500, is the important area to watch. So last week I've been playing a lot the game of trying to catch the long positions here exactly or slightly above the moving average. Played out very, very well because the risk-reward ratio is really in your favor. Talked about this also a lot last week. So, and as you can see here today, we had this again. Yeah, we attacked this 200-day moving average, which now obviously acts like a support because we pierced through it on the way down. It's a support, not resistance anymore, obviously. And we see the market bounced off here this morning really very well. So yeah, this is for me personally the area I'm still looking for entries. And one thing also that strikes the eye a little bit is this typical bullish movement we are seeing here with higher highs and higher lows. So you have, and let me quickly get a drawing tool for this. So what you'll see is, I think we can use this one here. Typical, you have a move up, chip. This one is not so good. I'll just do it with the path here. So you have a movement up, zack, then the consolidation comes, the correction of that move comes down, move up again, move down, move up again, and now again move down. And very, very typical, oops, now deleted it, sorry. Very typical in this case is that not only in this case, in general, in those trend markets, bull markets, in this case is that you always have higher lows. So you had one higher low here, you had a higher low here, and it looks a little bit like we're going to have a higher low here again. As long as this pattern doesn't break, and I try to illustrate this with a trend line here also, as you can see, we are in the safe territory in my opinion. Now, there are two scenarios that we are most likely going to experience this week, in my opinion. The first one is that we really bounce off here again with a strong move upwards. That is going to lead us here in the area. This is the target area at the moment of 50,000 US dollars. And this can play out very, very quick because we are in a sentiment of greed. We are in a sentiment where the market is more looking at positive news for cryptocurrencies, especially for Bitcoin, than for not so good news. So those moves can be very quick. And if you look at this candle over here, if we would happen to see a candle like this today or tomorrow, this would already be enough to lead us in this area of 50,000. The second scenario that can play out, and this is my favorable scenario because it's the more healthy scenario for the market, is that we are going to see markets first move in a rather tight range sideways. So a little bit of what we've been seeing here already the last 2 to 3 days, something like moves between 45,500 and 48,000. I mean, this is, when we talk about traditional assets, still quite a price span. But for Bitcoin, of course, it's not. Bitcoin is more volatile than classical assets out there. So this is also a scenario we could see that we oscillate a little bit around the area of 45,000, maybe 48,000 first, up, down, to calm the market down, to like dial the market in, I would like to maybe call it. By that, I mean that the sentiment returns to the neutral zone, that this greed that is currently in the market is kind of built off again. The market gains strength again to pierce through the 50,000. So those are at the moment my two scenarios that I see playing out this week, possibly next week. And I personally, again, think it's very easy to play this. And as you know, I'm always advocating every student of the Prime XPT Trading Academy to, no matter if you're day trading, no matter if you're scalping and trading 1 minute charts or tick charts, or you're a month-long investor with a month or years of time horizon, you always need a game plan. And the game plan, by that I mean, where do I enter the market? Where is my opinion proven wrong? So where do I exit the market with a loss? And what is my target area? What do I want to achieve? And I mentioned this also a couple of times already last week. I think for me personally, entering the market around this area of a 200 days average with a long position is my personal favorable position at the moment, because it gives me the opportunity to, let's say, if we enter at 45,500 and our target is 50,000, to gain $5,500 while maybe putting my stop loss somewhere down here around the area of 40, or maybe below the latest low, the last low we had, which was in this area here. So let's say 43,500. So I risk $2,000. We enter at 45.5, exit at 33.5, to actually gain $4,500 dollars. So our risk reward ratio is very, very good in our favor. We can earn more than double of what we are risking. That means we don't need to be correct more than 42% of the time actually to not lose money. And ladies and gentlemen, this is always the most important when you start trading, to get to a point where you don't lose money. Normally the winning comes automatically after this. But please bear in mind, this is just my opinion. This is how a lot of professional traders approach the situation at the moment, and institutional traders at the moment. It's important that you make your own mind, that you make up your own mind, that you do your own due diligence, and adapt the trading strategy you are choosing to your personal time frame. So if you're somebody that has a job to go after regular every day, of course, this is strategy, this is a game plan that suits you very well. If you're somebody that have a lot of time, you want to do scalping, maybe that's not for you. Good. So yeah, not so much new really. Nothing has changed in my opinion to what we were doing last week. That's actually a good thing. Why should we change a winning horse at the moment? So two scenarios: either we see the peers up, we go sideways, or if we break below the 200-day moving average that is on close, the likelihood of a consolidation continuation down into this area here is going to be on the table again. So another thing I would like to introduce to you guys today is the market research report by primexpt.com. So once a week, if you're a client of PrimeXPT already, you receive this automatically by email if you haven't unsubscribed to it, which I hope. If you're not a client, by the way, please click on the link. You'll find them below Twitch or YouTube. Depends on where you're watching. You'll find a sign up link to open an account. Very easy, very fast done. So you can start trading. We have an offer, by the way, at the moment also. Well, you get a 50% deposit bonus with a promo code Trading Academy. More on that later. However, so if you want to follow along, you can do so by opening an account there. And if you use the links here, of course, you support us here in our Trading Academy as well. So market research report once a week, compiled for our clients by our very own Kim Schur, our PrimeXPT market analyst. And she's giving a lot of insights always in what to expect. So you'll see a lot of summing up of what we are covering here in the shows. And I just want to go through the latest report because it fits so well into the current market narrative you see me propagating here and you see out there. So first of all, we had the event, and she titled this here as "Nothing is Stopping This Crypto Revolution." So we had the $1 trillion infrastructure bill in the USA passing, and there was a lot of discussion about how they defined brokers relating to cryptocurrencies. Like, without going too much into detail, was the discussion if they have to submit information to the IRS, the taxation authority in the United States, to be able to continue their work. So there was the fear of developers, Bitcoin mining companies, and others in the destructive leaving America. But it really didn't have any impact on the market. The market really didn't show any interest in that. Normally, if we still would have been down here in the area where we had extreme fear in the sentiment, of course, we would have crashed down. Just like we did when Elon Musk tweeted of Tesla not accepting Bitcoin anymore, or China banning cryptocurrency mining. We didn't see that. Another positive news last week, AMC, the movie theater groups, planning to start to accept Bitcoin as payment for movie tickets. And the president of Argentina, said he is open to making Bitcoin illegal tender in his country in Argentina. And this is very exciting because that would be the second country after El Salvador doing so. And if we look at Argentina, and I'm going to probably talk more in depth about this tomorrow, or maybe on Thursday. Argentina has been very classic country for defaulting, meaning they cannot pay back their debt, largely because they issued their debt in US dollars and had to devalue their currency. But more on that later. So very interesting also, and it shows that how much really is going on here on that market. The total exchange volume for cryptocurrencies is on the pace to reach 16 trillion US dollar this year. So that's more than 8 times the volume we saw in 2020, where it was roughly 1.9 trillion. And it surpasses even the trading volume in FANG stocks, annualized, that is, of course. And this is really supported, and I cannot stress this out enough, by what we see at the moment on the in the chain metrics, on the on-chain metrics. So when you really look into the blockchain, into the recorded transactions there, you can deduct informations on who is actually selling and buying Bitcoin at the moment. And what we see is that so-called old coins, so people that bought coins, that held onto their coins, that put them into a cold wallet, for example, somewhere, are holding onto their coins. On the contrary, they are accumulating more Bitcoin at the moment, whereas you see the spending from very young coins. So it might be day trading activities, might be people that have gotten in at lower prices and are now taking profit. So people usually that only have a time horizon maybe of 3 to 6 months. Those are the ones that are sellers at the moment. Others out there, and this goes as well for the so-called whales. So the market participants out there with large pockets that have thousands or tens of thousands of Bitcoins in their wallets, they are still reaccumulating at the moment. And you can see this very well. Also, where is it? Yeah, this one I wanted to show you here, in an indicator that is called the bullish crossover of hash ribbon metrics. And without going too much into detail here, this has to do with the mining activity of the network. You can see there that the 30-day hash ribbon is about to cross over the 90-day hash ribbon. Difficult word. So you can see this down here. Maybe I zoom in a little bit for you. And this in the past always used to be also a bullish sign of rising prices thereafter. So everything on green, you might think, right? But it's very important, again, to have your game plan ready. Don't go into the market blind. Always have your exit strategy, because even if everything is pointing at the moment in the direction of, yeah, we are going to see the 50,000 very soon, we are probably going to see all-time highs, we are maybe going to see 100,000 or 300,000 or 500,000 this year in the upcoming month. We talked about what the more popular models out there for price prediction are propagating. If you haven't watched that video, please go back to last week's video and have a look at it. We will post the links here later on YouTube as well, of course. So everything looks green. And this is normally the time where you have to become a little bit cautious. And you can become cautious if you are long, if you are buying Bitcoin at the moment, if you are building up positions, by remembering to place stop loss. Have a game plan ready when you want to exit the market, when you're proven wrong. Because all of this positivity won't really matter if we have a black swan event like we had back then, when we had Elon Musk twittering about Tesla, when we had China banning Bitcoin, all roughly around the same time. This was is called a black swan event because nobody was expecting that back then, and this usually leads to statistical outliers, probably a mathematician would say now. Meaning, yeah, long term the model still points upwards towards, for example, 100,000, but that doesn't mean that short term it cannot dip down to 30,000 or 20,000, for example. So this is always something you have to keep in the back of your head, and that any analysis out there is only good as long as it's valid. Sounds stupid, I know, sounds a little bit naive, but you want to be prepared for every occasion. That's why you not only decide based on the sentiment, based on the fundamental facts or technical analysis, whatever your vehicle of choice is to make decisions to enter the market. You also need to have a strategy on where you want to exit and where you want to bank in your profits, because the profits are only profits you can spend on something else, for example, if you've closed the positions by the end of the day. Okay, with that being said, we are coming already to an end for today's episode, so rather a short episode today. If you're not doing so, please take a minute to also follow us on Twitter under px_academy. And most important, if you want to become and are not already a client of primexpt.com, you can use one of our sign-up links you'll find below here on Twitch or YouTube, depending on where you're watching, to open an account. And when you enter the promo code Trading Academy, all in capital letters, here on the, you click on margin, then on account, and activate it, you will get a 50% deposit bonus on all deposits you are doing until, I think, mid-October that is. So that's a great way to get started. If you have any questions and would like to get in touch with us, you can do so by writing an email to academy@primexbt.com, and we will answer, of course, every single email out there. So if you feel unsure about what to do with your position, if you feel unsure about anything you've seen here, or in general have questions you would like to have covered here live on this show, feel free to drop us an email. And my promise to you is my team and me, we will answer every single email. And there are, of course, no dumb questions. All right. Thanks for watching. I will see you again, if you want, tomorrow at 10 a.m. and Thursday at 10 a.m. Until then, please stay safe and remember always to use a stop loss. Goodbye.